Hello and welcome to today's update. Today is 8th of October, and we'll talk about what happened on the market. It was a very negative day. You're looking at the daily chart of S&P 500. It fell 2.8%, and Nasdaq lost 3.88% on Friday. And this was after the unemployment report that came out slightly worse than the market was expecting, and we'll have a look at that momentarily. What I wanted to bring your attention to is that market had rallied 3 days in a row ahead of this report, perhaps expecting that the report might be slightly weaker than expected. And this is quite similar to this area. What you see is that four green candles. So the market had rallied up ahead of the CPI. This was the last CPI report, and when the CPI was above expectation, market fell sharply, and that's exactly what we saw on Friday. Market had gone up. It had gone up to this 20-day moving average, and then pulled back from there. So let's have a look at the report and see what exactly was concerned. First of all, market was expecting 250,000 new jobs to be created. The actual number was 263, so this was slightly above expectation. The other thing was market was expecting unemployment rate to remain at 3.7. So this is where it was last month, but in fact unemployment rate dropped to 3.5, showing that the labor market is still quite strong. On the positive side, the wage inflation, the rate at which wages are going up, was expected to rise by 5.1%, but it actually rose by 5%, so that's positive. But market basically looked at the other numbers, the number of new jobs created, and the fact that the unemployment rate fell from 3.7 to 3.5%. That basically spooked the market, and so what we see is a big drop. I think the market wanted to go down anyway, and this report was just a reason to sell, because market sort of has some unfinished business in terms of the levels that it could fall to. So let's have a look at the weekly chart and see what are some of the potential levels that we should be looking out for. So this is the weekly chart of S&P 500. You can see that S&P 500 closed right at the 200 weekly 200 period moving average. So this is one area of support. I'm not sure if this is going to hold. The other levels to look out for is this marked the first red line. So this level is this is an important level. So I've got a Fibonacci drawn right here from the COVID lows to the market highs early this year. The 50% retracement sits at this level. This is the first red line. So that's at 3,500. So this is the first level of interest. Now you can see that on the left hand side there was support and resistance at that level from 2002. So that would be an area of interest. Then the next level would be the pre-COVID highs, which is right here. So this level is going to be, so this level for S&P 500 is around just below 3,400, 3,375 thereabouts. So that would be another level of interest. And finally the 61.8 fib, which is right here, and that's around 3,200. So those would be the levels to look out for. So when I said that market hadn't had some unfinished issues, perhaps it's one of the fib levels that it wants to go to, or possibly even the pre-pandemic high, and then rally from here. So because last week it just closed at the 200-day, but some of them, but there are some fib levels which are quite relevant. So maybe it touches those fib levels. So those are the levels to watch out for. Now, if we look at Nasdaq on a weekly time frame, just to see what are some of the levels to look out for. So for Nasdaq, the first level, Nasdaq is already below the 200 period weekly moving average. So the first level is this 61.8 retracement level, and that's around 10,600 level. And below that, the next level would be this pre-pandemic high. That sits around 97.36, 97.50, let's call it. So those would be the two levels to look out for. And further than that, I mean, we're talking about something like this, 78.6% retracement. So let's wait on that. Let's just see how the market reacts at the 61.8 level. And if that level is breached, then the pre-pandemic high. So those would be the two levels of interest. If we look at QQQ and SPY quickly, just to see what the corresponding levels are. So SPY as is at the 200 weekly 200 period moving average. So if this level is breached, the 50.5 retracement, 50% retracement from the COVID lows sits around 349, 350 level. The pre-pandemic is around 338, 337, 338 level, and the 61.8 retracement is around 319. So let's see what happens to the first two levels. The 0.5, 349, SPY closed at 362.79, so that's not too far away. And then the pre-pandemic would be the 330, 337, 338, somewhere around there. And for QQQ, the 61.8 level is around 259, and the pre-pandemic level is around 235, thereabouts. So those would be the levels to look out for. So let's look at the resistance. So if the market rebounds, where can we expect? Well, for that we need to look at the smaller time frame just to see. So this is S&P 500 hourly chart. So you can see that there's this downward moving channel. If it falls all the way to the lower end of this channel, that would bring it to the 3,500 that we talked about. Now, resistance for them would be, so there's a gap right here. So the top of the gap is around 3,700, and then obviously the top of the channel would act as a resistance also. For Nasdaq, so if the previous low is breached, then the bottom of the channel comes in. So the bottom of the channel is basically the 61.8 fib retracement that we just spoke on the weekly chart. The first area of resistance is around 11,300 level, and then the top of the channel comes into play. For SPY, those levels would be again the 349 that we talked about, which is the bottom of this channel. Resistance would be around 370, and then top of the channel. So overall, if we look at it, if we look at the daily chart, overall momentum indicators are quite weak. MACD, it did make a cross, but hasn't progressed further. RSI, while it had moved up a little bit, but it was below the 0 line. So moving average momentum indicators are weak. Stochastic has just crossed over. Looks like it wants to go lower. So it's not momentum indicators are weak. Same with Nasdaq. If you look at it, RSI is well below the 0 line. MACD is well below the 0 line. RSI is below the 50 level. So there's nothing on the momentum indicators which suggests that the market is going to have any significant rally at the moment. Now that said, keep in mind next Thursday the CPI report comes out. If the CPI report is weaker than expected, then things could change. But on the other hand, if the report shows that the inflation remains elevated, I think the market is expecting inflation to be around 8.1, 8.2%. Last month it was 8.3. So it doesn't look like the market is expecting anything significant to the downside. It's the CPI is expected to be pretty much close to where it was last month. So the market would have to see the actual number come in well below the 8.1 level for there to be any kind of turnaround. Now let's look at the bond market just to see what's been happening. A lot going on in the bond market. So we'll start with the futures. So the April futures, it went up 10 basis point. You can see that it had kind of pulled back and then it was going sideways. And after the report, the jobs report, it went up 10 basis point to close at 4.65. So it's now getting close to the previous high, which was around 4.8, and also getting close to the Fed's terminal rate of 4.75 sometimes middle of next year. The March futures also rose 9 basis points, so it's also going up. The two-year is also, it's pulled back to the 20-day moving average, and then it started to move higher. So it's getting close to the previous high, which is around 4.38 thereabouts. It closed at 4.31. So if this goes up a little bit further, then we could see additional weakness in the market. If we look at the 10-year, so this is the 10-year. So the 10-year also, after pulling back to the 20-period moving average, it's now started to move higher. So the previous high is around 4%. So it closed at 3.89. So that's another 11 basis points away from the previous high. So we'll see what happens. One thing I'm noticing is that the momentum indicators are kind of weak. They're not going up as much. So that's point to note. But I think 4% is would be a near-term challenge area. If it goes above 4%, market, I don't think market is going to like that very much, because 4% is an important level. If it goes above 4%, I think we could see some additional weakness in the market. So we'll see what happens in coming days. Plus, we've got the CPI report. It's possible that it goes up to 4% ahead of the CPI and then drops after that. We'll see. We'll see. The next few days is going to be important. Moving on to dollar, which means that with rates, yields backing up, dollar was very strong. So it was, I'll just move the moving in. Dollar was strong, so it moved up. It's now heading towards the top of the channel. Very much remains in an uptrend. Not seeing, but momentum indicators are beginning to show some weakness. RSI, it's moving up, so not sure that RSI is going to be able to get back up to the previous. So that might create some kind of a negative divergence. Negative divergence doesn't mean that it has to fall, but there is a chance that it could fail. So we'll see how these things develop. But at the moment, it remains very much within an uptrend. If we look at gold, gold obviously fell with dollar going higher. It remains within this channel. This is a downward sloping channel. So, resistance would be at the top of the channel. If it falls below the middle of the channel, then it exposes the bottom of the channel. Momentum indicators have started to go up, but it remains below the zero line. So, as long as it remains below the zero line, the momentum is considered to be weak. RSI, don't like the shape of RSI right here. That's that's showing it's making a lower high. Stochastic is also turning over to the downside. So we might see some pullback with dollar going up, with yields backing up. We might see some pullback weakness in gold. Oil was quite strong on Friday, with the OPEC deciding to cut oil production. Oil rose almost 5% on Friday. You can see that it has broken this downward channel. It has also broken through the resistance around 90. It looks like it's heading towards the next level, which is around 97.50. You can see the momentum indicators are moving higher. RSI has been going up. It has gone above the the 50 level. MACD is coming up to the zero line. If it goes above the zero line, so that would be positive. So we could see additional gain in oil. So this is one of the bright spot in the market. If we look at VIX quickly, so the VIX also rose. So it was up 2.75%. Now in the process, what happened is there was a lower high, lower low. So it basically managed to, it was right here around 30. It managed to overcome that. So this bearish pattern has now been negated. It's now in between the, the 20 on the bottom and 37.5. So we'll see whether or not, so this is the near-term high, which is around 35. So we'll see whether or not it's able to push through 35 and go to the top of the channel. It found some support at the middle of the channel. Now, if we look at some of the sectors, I mean, I just wanted to bring out a couple of sectors which, they're considered defensive, but they're just looking, very, very weak. This is XLU, this is the utilities. It's been coming down really, really hard and then broke below this support. This support held a couple of times, so it's that's looking good. This is supposed to be a defensive sector, but looks like investors are selling off the defensive sectors really, really hard. Because if you look at the, I'll show you another defensive sector. This is XLP. This is the staples. Even the staples are getting hit hard. These XLU, XLP are supposed to be kind of, place where people can move their money to. But defensive sectors are actually quite weak. If I look at the relationship between XLY and XLP, you can see that this is the period where XLY is supposed to underperform XLP. The growth is supposed to underperform value, but I'm not seeing that. I'm seeing that growth is holding up quite well against the value propositions. So we'll see. The other sector that I wanted to bring, this is the real estate sector within S&P 500, really, really getting hammered. Everyone talks about growth, but these are some of the more defensive areas. These are getting value areas. These are getting hard with yields backing up. This sector is getting hit hard. Moving on to this is semiconductor. So this was in the news on Friday. AMD came out and said the earnings are going to be weaker than expected. So the whole sector basically came under pressure. XS it lost almost 6%. It's now coming up to the previous low right here. Previous low also happens to be, if I show you the weekly chart, you'll see that previous low also happens to be at the 61.8% retracement. I have a fib drawn up right here. So if this level is breached, the next level of support is around right here, around 287, and after that the pre-pandemic high, which is around 260, 270. So it's looking quite weak. Momentum indicators, even on a weekly basis, MACD is well below the zero line. It has now crossed to the downside. RSI is below the 50 level. So momentum indicators remain quite weak. So I could see some additional weakness in the semis. Biotech beginning to look weak now. So there's this downtrend. It came up to the downtrend, got rejected. So this is the support right here, the 75 level. Momentum indicators are weak. MACD is below the zero line. RSI has now crossed below the 50 level, so that's looking weak here. So we can see some weakness right here. Solar got hammered on Friday. So this is solar. It's now making lower low. So this is looking quite weak. If I I'll just show you a couple of the solar stocks. So this is Enphase right here. So Enphase looks like it's formed a head and shoulder pattern right here. So you've got the shoulder here, you've got the head right here, and you see the right shoulder, which is slightly below the left shoulder, and that's basically what you can that's a classic head and shoulder pattern. So it's got support right here initial around 230, 229, 50, 230. So there's a gap right here. So there was a gap right here that got filled. So there's a gap right here, so we could see this gap being filled. So this is looking weak. If you look at the momentum indicators, they're all heading lower. MACD just crossed below the zero line. RSI, you know, found resistance at the 50 level and is now pulling back. So that's looking weak. Another one I want to bring to your attention is First Solar. So this, you know, it had a big run up. Now I'm seeing big weakness. If you look at the momentum indicators, MACD is just started to weaken, RSI is weakening. So there was this channel right here, it broke below this trend line right here. So there is horizontal support right here around 127. If this level is breached, then I could see something like 111, 112, level. So this is looking weak actually. So this is part of the solar sector. So there, you know, those stocks are looking weak. If we look at some of our big cap, so this is Tesla. So Tesla has continued to move lower. So it's now coming up to the bottom of this channel. So that we could see some reaction there, but the momentum indicators are really, really weak. MACD, you can see, just continues to head lower. RSI, but they're oversold, no question. If you look at RSI is at 27. Stochastic, you know, so we could see some reaction right here. Another reason why we could see where the moving averages are on the 20 and 50. They're around 275, and the price is way down here. So whenever the price moves away from the moving averages in either direction, there is a propensity to get back. You can see right here when prices started to move away, we saw a bounce and then get back up to the moving average. So I could see something like this in not too distant future. Maybe it wants to tag the bottom of the channel and then bounces and then meets up, gradually starts to move higher and catches up with the moving averages. But overall, technicals look weak. If we look at Apple, no different. So you see, moving lower, coming up to this previous swing low right here, around 138. So we could see that test in coming days. If this level is breached, next area would be maybe the June lows, which is around 129, 130 level. You can see the momentum indicators are now quite weak. Well, MACD is below the zero line. RSI has been making lower lows. So this is looking weak. Only thing is that it's oversold. But sometimes stocks can remain oversold for extended period of time. If we move on to Microsoft is on the verge of falling below the previous low from last week, around 233. If that happens, then we've got this downward sloping channel. The lower end of the channel comes into play. That would be around 223, 24, depending upon when it touches it. So that's looking weak. If you look at the momentum indicators, quite weak. If we look at Nvidia again, lost 8% after AMD's news. So we've got this channel, so it can slide down along the bottom of the channel. So I'm not seeing anything positive at the moment. Momentum indicators remain quite weak. Netflix, let's have a quick look at Netflix. So something interesting might be happening. So you see, Netflix has been consolidating within this channel, and it spent quite a bit of time in the upper end of this channel. So it's now coming up to this, this level, which has acted as support. If this level is breached, then we could see some quite weakness. It could gradually move lower down towards the bottom of the channel. There would be some support around 191. So this upper end of this channel is quite important because it spent a lot of time in this area. So once it spends a lot of time and then breaks, you could have quite a big drop. So something to keep an eye on. I mean, it has held up relatively well compared to the other big stocks. I mean, after this big drop right here, it's been kind of building a base. So the question is whether it wants to go all the way to the bottom of the channel and makes a double bottom right here, we'll see. But I'm watching this level right here, the middle of this channel. If this level is breached, then obviously other levels come into play. So that's Netflix. I wanted to bring attention to some of the other stock like AMD. So this is AMD. AMD lost almost 14%. So continue to move lower. So we've got this channel right here. So it looks like we could see a test of this bottom of the channel. There's been quite a few reactions at this level. Reaction means that it just moves up a little bit, it can go sideways and pull back to the bottom of the channel again. So we'll see what happens when it reaches the bottom of the channel. If it does so, after announcing earnings weakness, if the overall market remains weak, I think this could underperform on a near-term basis. If we look at some of the other stock quickly, Walmart, so that doesn't look good. Resistance, it found resistance at this downtrend line. Now it's broken this upward channel. So near-term support is around 125.50 and then 120, so that's looking weak. If we look at the ARC funds, they are not looking positive, so this one is about to extend to the downside, so that's looking weak. This is ARC-G, so that also is looking weak, consistent with the biotech sector. Biotech sector is pulled back, so this is basically bringing down the genomic stocks, so that's looking weak as well. So overall, I think next few days market probably it will remain a little bit weak. I don't think there's going to be any significant rally ahead of next Thursday's CPI report. If there is to be a rally, it could come after the CPI report if the report is weaker than expected. That's all for today. Thank you very much for watching the video.